Hello, everyone, and welcome to this Power 50 webinar. My name is Polly Jean Harrison. I am the features editor over at the Fintech Times, and I am thrilled today to be here presenting this webinar on digital banking. We have a fantastic group of panelists here today, and the discussion is going to be absolutely amazing. So, with the use of digital banking services growing exponentially in the last few years, the industry is constantly reinventing himself. Consumers can now access banking services from anywhere in the world at any time, with banking's transformation becoming an industry standard. In this webinar, we hear from our expert panelists about the current digital banking landscape and the trends that are taking hold. Our panelists will also examine the challenges currently facing players in the industry and what the future has in store. So I'm thrilled today to welcome onto the webinar Adam Desmond, the Commercial Director at IDverse, Daniel Greeler, CCO at Weaver, and Jonah Adams, MD, Digital Infrastructure and Managed Services at Interswitch. Hello, everyone. Thank you all so much for joining me today. It's an absolute pleasure to have you here.
Hi there.
Hi, Polly.
Thank you for having us.
Perfect. So I want to start by just giving you all the opportunity to both introduce yourselves and your company, the kind of things that you do. So Adam, why don't you go first?
Thanks, Polly. Yeah, my name's Adam Desmond. I've been in the identity space for the last 10 years, focusing on government-issued identity document and biometrics. And at IDverse, I lead the commercial teams across Europe. And IDverse is essentially a fully automated document verification and biometric solution that enables you to onboard customers from anywhere, at any time, and in any way. And yeah, looking forward to the conversation today.
Amazing. Thank you so much. And Daniel, why don't you go next?
Hi, Daniel Greeler, Chief Commercial Officer at Weaver. I've worked in banking and payments for 20 odd years. First 10 years, big companies, HSBC, American Express. About 10 years ago, I decided to get up into the startup world. So I've worked for a couple of different startups now, always doing very cutting edge, disruptive things, data sharing, artificial intelligence, this kind of thing. 3 years ago, I joined Weaver. Weaver is a leading embedded finance provider. So we help to put financial services inside of digital solutions, what we call financial plugins, products that are embeddable by design.
Fantastic stuff. And Jonah, last but not least, why don't you give us your introduction?
Yeah. Hi, everyone. Pleasure to be here. My name is Jonah Adams. I'm Managing Director of Interswitch Systigra, one of the business divisions at Interswitch. Interswitch is a Nigerian-based fintech company. We are a technology company at heart, and we're focused on payment and commerce. So we're the first African-based unicorn out of Africa. So what we do is provide payment and commerce technology to banks, fintechs, and financial services company, as well as other industries. We've been in the market now for about 21 years, and we've been very successful in the market. We are owned by venture companies, PE firms. I also have Visa as part of our shareholdings. We have operations in about 5 or 6 African countries, and basically what we do is to support banks, fintechs, and co to grow their payment business across Africa.
Amazing stuff. Well, thank you, all three of you.
We do have this market share in Nigeria, and hopefully we want to grow that across Africa. So thanks.
Amazing stuff. Well, thank you all three of you for joining me today. I'm really excited and interested about the conversations that we're going to be having, because I feel like digital banking is such a broad topic that we're going to be approaching from 3 quite different angles. So I'm really interested to see where we go with this. But why don't we start the conversation with kind of, I guess, a pretty high level question of what does the current digital banking landscape look like to you? And I guess also what kind of trends are you seeing at the moment playing out in the space? And, you know, I guess with only I think it's like 15 weeks until the end of the year. So we've had a pretty significant 2023 already. So it'll be great to see what you guys are seeing. So Daniel, why don't you take that one first?
Sure. Thanks, Polly. Happy to. I think the big change is the way in which people consume financial services. So, you know, but banks exist ultimately in order to provide financial services to customers. Historically, if you think way back sort of 40, 50 years, it used to be you would go as a consumer to your bank branch in order to go and get a financial service, a bank, a loan, and a mortgage, etc. The change over the last sort of 30, 40, 50 years has been well documented. Branch to online, online to digital. Where we're seeing it now is the shift from purely digital, as in I have an app or I have an online banking facility, to embedded finance. And the whole point about this is consumers, whether or not they're individuals or whether or not they're businesses, expect to receive financial services inside of the digital services that they're using. So our company, my company, Weaver, is an embedded finance provider. Embedded finance is not a new idea. It's the idea that you get a financial service inside of a non-financial journey. Car loans is a great example. Car loans have been taken out when you buy a car in a garage for years and years and years, right? And then that became, you buy a laptop on installments. You go into or what have you, and you buy your laptop or your white goods, and you get a. So these are in finance ideas. What's happened more recently, the trend we're seeing now, and companies like Klarna are a great example of this. I want to take a loan out at the point that I get the service, right? So this is now getting the lending at the point at which I buy the purchase. Whether or not experience, whether or not it's the Amazon experience, whether or not it's the experience, people expect to get their services invisibly inside of whatever they're taking, and that's really the trick that they have to solve right now. It's not a case of build it will come. You have to build it to be contextual at the point of need inside of the journey that everyone's going on, because the consumer expectation is will stay in the digital situation that I'm in, whatever that is. They don't want to get their credit card. They don't want to have to input any other details. They want it to work. They use all their other software, which is just click, 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 and it happens. So you need more data to be able to do that. You need more technology to be able to do that frictionless experience. So the trend that banks are really having to deal with is this idea of take a financial service invisibly inside of a digital service is a huge infrastructure change, and it's a huge change in the way that people think about risk. So this the real challenge that people are grappling with. But when you get it right, it's the biggest distribution channel, and there are dozens and dozens of huge success stories in this space. Companies like Shopify, who are now making 3 times as much money from financial services as they are from their software sales. So this is the shift that's happening in digital banking. No longer get an account so I can do something. It's have an account inside of the thing that I'm doing.
Yeah, that's a really interesting viewpoint. I love that. But Jonah, what about you? What are you seeing in the industry from your perspective?
Yeah, I think from my perspective, Daniel has covered the consumer side. I like to look at it from the kind of evolution we've seen in terms of the infrastructure. Again, when you talk of digital banking, what you're talking about is customers using digital channels. So for me, what has been interesting to look at is the evolution that banks have had to make in terms of the infrastructure that they've had over the last 10, 20 years. We've seen situations where banks practically had to build stuff on top of their legacy systems to be able to support some of these digital banking initiatives around mobile, around internet banking and the rest of it. But now you then find that with the entry of the fintech players, the neobanks and the other types that we've seen, we thought that they will be run out of the market, but they've responded effectively. They've adapted to some of these new technologies and some of these new ways of providing these personalized banking services. The other interesting thing that has also come out in the last 20, 30 years of digital banking is the new interesting business models that we see. If you go back and look at the books of the banks in the last week, the way they make money in 30 years ago, it's not the same way they make money now. Daniel was just talking about embedded finance and the rest of it. We've seen banks effectively respond to some of the needs of customers, having to embed within their digital banking channels, within their digital banking platforms, services that they need in their everyday lives. The other interesting perspective that I've also seen is the fact that digital banking has evolved beyond the consumer. Okay, we're now seeing that banks are leveraging this channel, this technology, to provide services to small businesses, to the enterprise, to what we now see as the consumerization of the enterprise. So I think from where I sit, the banks have done a good job. The fintechs have done a good job of driving that change and innovation in the last few years. I think regulation also is also providing his own interesting perspectives to it. So I think it's been interesting.
Yeah, absolutely agree with you there. But Adam, from your perspective, what do you think about this current landscape?
Yeah, look, there's no doubt it's evolving, and in the 10 years I've been in the identity space, it's very much seen huge changes because of technology changes, the devices that are now available to you to carry out these financial transactions, but also the changing landscape of fraud as well. So we look at things when we're talking about digital banking from a onboarding perspective as part of a regulatory KYC AML approach. And we're focusing on just on the document verification and biometrics. And even just that thin slice of the KYC process, we've seen it go from people manually eyeballing documents or getting a fax back in the day to actually these devices that are in people's hands now enable them to take a really high quality definition photo of a document. But because fraud's evolved and adapted, tools and systems are able to create pretty decent fake documents now and get through those processes. And data being so compromised as well, it's about layering and offering multiple data sources and touch points, whether it's normal electronic data that you can check against a government database. Behavioral biometrics now is quite popular, bringing documents to the forefront as well. But all of those on their own is still not enough because AI is really accelerated. So actually we're seeing now a lot of biometrics becoming mandatory in the process. So it's about layering that security. So you are adding friction to a journey potentially for the consumer, but it's beneficial friction because it reassures them. Everybody's used to opening their phone with their face now. So again, it's how that has evolved over time, and you see it, they're having to bring more steps and more processes in place to protect the customer and protect their business from things like account takeover or push payments and things like that. And actually, whilst it does create friction at the front end, at the back end, when it comes to payments or forgetting your password and resetting, you carry your face around with you. So it's actually there and available, and it's a benefit longer term, and there's huge ROI, a little bit of pain at the front end, but certainly you get that reward at the back end. And I think one of the biggest changes I've seen is actually, you would think it's the fintechs and the startups that are the most agile, but they've got to a stage now where they're having to become profitable and they're growing so quickly. They've picked a vendor at the front end, and then they've sort of stuck with that vendor. So it's the big retail banks that are creating these innovation teams, and they've got the resources and the funding because they're already profitable to invest back in. And I see a step change in digital, where the retail banks are going to be leapfrogging these so-called digital banks that are becoming the legacy banks, and they're getting too big and they're trying to create more products that they can't be as agile as they probably were at the start. So a big shift and step change in the market from that perspective.
Yeah, absolutely. And I feel it's interesting what you say about friction, because I know that is sort of kind of a big hot topic at the moment, but I completely agree that you have to kind of have a few more layers of friction in order to feel secure. Because I mean, there's one digital bank that I bank with that to send a money transfer, you just have to click OK and then it goes. And to me, that I don't like it, because I like having that extra step of, are you sure this is okay?
Yeah.
Yes, I am. Thank you.
I call that beneficial friction. So
yeah,
building that trust with the consumer that actually you've got their back and you're just putting a few extra checks in. I don't think anyone's going to mind doing that, as long as it's a good experience and a good customer experience.
It's that fine line, isn't it? It's finding the balance of getting that consumer need to get things done quickly, but also, yeah, let's keep things nice and safe and secure. So that's really interesting. And you all kind of touched on this when you just answered that question, but I'd love to know kind of how you've seen things evolve over the past 5 years or so. I'm using 5 years as an arbitrary number, but just generally like through the industry, because as we said before, it's such a fast-paced, fast-growing environment that things are changing all the time. So if you were to look back to 5 years ago, how have things changed? What are the differences there? Jonah, why don't you go for that one first?
So I think for me, thanks for the question. For me, one of the key things that has been really interesting in the last 5 years is the impact of regulation and the actions of our regulators across board in driving and shaping the evolution of digital banking. One of the things that we've seen, especially in our environment, is that the regulators have actually supported that effort. So they've had to effectively define rules that allow us to manage risk, what Adam was talking about now, lower what you would call authentication, two-factor requirements around some of those things. But they've also defined rules. If you look at Europe, Africa have adopted the PSD2 effort that has also helped driven the availability of consumer data, which has helped enabled a lot of these new banks reach new customers, new niche environments. So I think from where I sit, big kudos to the regulators and to the lawmakers for the efforts they've put into to ensure that digital banking is where it is. There's still a lot of work to be done, and I think we will see interesting times ahead as we begin to look at AI, we begin to look at the impact of identity management, the impact of data security and privacy.
Yeah, absolutely. And we'll be touching on the time ahead as well. But Adam, looking back still, how do you see things changing or have changed?
Yeah, I think obviously the regulators, I agree, are doing a good job at keeping pace with the technology changes, because technology is changing at such a rapid speed, especially with the advancement of artificial intelligence and things like generative AI, where people can create really sophisticated images now that look like real human beings. But the biggest change for me is actually automation. And it's the same with everything. It starts off as a manual process and you have to do it all yourself. And it's quite resource heavy, labor intensive and slow. And then automation comes out. It's the same in the car and manufacturing industry. You know, it started off humans making the cars and now robots make the cars. You used to have to drive your own car and now a car drives itself. So it's same within banking. You've got automation coming in that's becoming more and more sophisticated. So actually, not that we don't like humans, but they can spend time doing more relevant jobs and making those you know, the straight through process is what we talk about in digital onboarding. But there's people that don't always fit the mold and they fall out of that straight through process. So it's making those experiences better and more seamless that's really having an impact on where humans can come in and get involved. But yeah, big thing for me is automation, and it's only really at the start, and we're going to see a lot more automation over the next 2-3 years as well. So but from the last 5 years, it's about how you can automate those manual processes to streamline the bank and the operations back offices as well.
Yeah, that's really interesting. Then, but Daniel, from your perspective, what have you seen previously?
In the last 5 years, we've seen, and maybe even in the 5 years before that, we've seen a huge amount of improvement in all the experiences that we've been describing, whether or not it's one-click payments, whether or not it's straight-through processing, automation. But a lot of it has gone into the consumer world originally, right? The consumer products were improved first. You know, starting all the way back to PayPal. I've already mentioned Klarna. I think in the last 5 years, and somewhat powered by the pandemic, that improved the heightened expectation that consumers had spread out into the corporate world as well. Certainly, most people I know have great consumer experiences on their banking apps. They use tools like what you name check, like Uber and Amazon. But then suddenly they have to pay an invoice for the project they're working on, and it's a 5-day piece of work because they have to send a PO out to someone to get approved, and then they have to check that actually the contract was the payment terms, and then suddenly you've lost a week, and actually now your project's taking that much longer because you haven't had a chance to actually get the payment, and your vendors got the hump, right? So what you're seeing is a huge amount of the innovation in terms of reducing friction or making sure it's the right amount of friction in the consumer world is spilling over into the B2B world, because people are sick and tired of having great consumer experiences in the digital world, but then having really poor corporate experiences in the digital world. So a lot of the innovation that we see starting with consumers getting great software and great digital experiences is becoming the expectation in the B2B softwares that we deal with on our day-to-day lives as well.
Amazing stuff. Thank you. So I guess we know what digital banking has been like previously, but where is it falling behind, do you think? Because I think we use the words digital banking to kind of mean, you know, the forefront of the future and how exciting everything is because we're all digital now. But I think there's still a lot of gaps in what digital banking could be doing. And is it still reaching up with that potential, possibly? I mean, Daniel, what do you think about that?
I think there's a couple of different ways to look at this. Open banking is a huge part of what's changed in banking over the last few years. We've recently made an acquisition of a brilliant company called Comma, and Comma existed because it was solving one of the problems that open banking hadn't totally solved itself yet, bulk payments and this kind of mass aggregation. So there's lots of areas in banking and digital banking that has huge potential. Open banking is a great one, therefore access to data. I think that's an area that falling behind, maybe that's the right way of putting it, but certainly where there's a huge area for improvement. And it's an area where businesses like Weaver, with its acquisition of Comma, are looking to see that we can take the kind of forefront on that.
That's really interesting. Sure. And then Adam, what about you? What do you think? Where are things falling behind?
Yeah, I think I touched upon this before, but it used to be the big retail banks where they have all these legacy systems, and there's so much information available for them now that they weren't really adopting it at the same pace as digital. So they were caught sleeping, I would say. And then you've got all these fintechs and challenger banks, neobanks coming along, creating great user experiences, focusing on the customer onboarding aspects. But as I mentioned, there's definitely a role reversal now where I'm seeing some of the big digital banks, they're growing too quick and they've not got the resources or time to make the changes. Whereas the retail banks are actually going to be leapfrogging a lot of these digital banks, because they're creating these innovation teams, centralizing things. Even some of the big banks like HSBC, where it's a identity as a service, and then anybody that wants to use identity, they can go through. They get a great economies of scale. They get a consistent journey across the brand and the bank, and it's hugely scalable anywhere in the world. So yeah, I think where people are falling behind is probably actually adopting with all the technology changes and not having the time to really invest in those changes. And because there's so much information out there of what the right thing to do is now, it's picking what are the right solutions and the right tools for them to use to create, keep moving forwards. I think they're pretty stagnant in terms of digital banks at the moment, but they're having to make changes, either regulation or because fraud is just getting impalatable.
Yeah, absolutely. And Jonah, what do you think? Are there any gaps in digital banking that you can see?
And yeah, I think for me, two perspectives. The first one is the inclusion. Is my link good? Hello, can you hear me?
Yeah, you're okay. You froze for a minute, but you're okay now. So if you start your answer.
Yeah, I think for me, two perspectives. The first one is inclusion. From my side of the world, what we see is the digital banking platforms that have been deployed in and around doesn't cover the entire customer base and even the market opportunities for some of the banks and even the fintech. So we still have significant gaps. When you look at some of the data points we have in and around Africa, you still have 45% smartphone coverage when you look at the core technology that is available to drive this digital banking. We've tried to pivot towards USSD, so we can do that on the what you call feature phone. But again, there's still that opportunity to lower the cost of acquiring the core technology, which is mobile, to drive digital banking. And that same experience, you have it relatively around most of the emerging markets. So for me, that's one big one. I think the second one, which is interesting, I think Daniel alluded to it earlier, is the fact that not enough industries, adjacent industries, is being digitized enough to bring all that into the digital banking environment. There was the initial resistance from the banks to say, okay, look, why should I allow third-party services within my environment? But that has changed now. But again, that effort to digitize as many more industries as possible. We know airline is done for. We need things like healthcare and all the other things to come into some of these platforms from a consumer perspective. Remember, the consumer is saying, everything I need to live my daily lives, can I get it here? So I think these are some of the opportunities that still exist.
Yeah, that's really interesting. And I guess following on from a similar sort of vein, what are the challenges associated with digital banking, particularly in the current landscape as we kind of look towards the future as well, with all this kind of new innovation coming in? where are things, I should say, getting a little bit trickier? Adam, what do you think about that one?
Yeah, well, obviously, there's huge amounts of competition out there at the moment. So you see more and more digital banks pop up, and some are getting very niche. So all of that is pulling customers and spreading them thin. So there's only so many current accounts that you can have, and then you've got your holiday cards and things like that. So the banks are actually creating really quite compelling offers to try and entice customers in. You saw Chase UK come to the market, big brand behind them, but they created a whole digital bank from scratch. And actually the way they enticed customers was offering a really fantastic saving rate, and that really drove adoption. So it's extremely competitive landscape, I would say, and the challenges are having the funds and the brand, but also what's the pull to get people across. So some of these niche providers and digital banks, they're offering like more of a community feel to the bank, and you're supporting other people in that community, and that's almost like peer-to-peer and things like that. But you need something really. You can't just create a bank and stick a logo and cross your fingers and hope it works. There's got to be something compelling there, and I think that's the biggest challenge now, is how are you going to drive adoption to get people come along to your banks? And I think the retail banks are in a good position because they're trusted, they're well known, and actually now they're creating these great experiences that's going to be putting the digital banks under a lot of pressure, because I think we discussed it slightly earlier, but trying to raise an invoice or get a PO out and things like that, if that's a bad experience, that's going to put you off using that service longer term, because it's just too difficult or too hard to do. So you'll look elsewhere. So competition for me is probably the biggest challenge from a consumer's perspective, but also for the banks out there is competing to get that share of wallet or share of customer base.
Yeah, absolutely. And Daniel, what do you think on that one?
I'm going to pick that theme up and run with it, right? Where are the customers, right? That's the question, right? So distribution is the big issue. We're almost 30 years from Bill Gates saying that banking was essential, but banks weren't, right? And I think this is in the digital age, I don't think it matters who you bank with. It matters how you get your financial services, and can you get them quickly, easily, in the way that you want. And we've said legacy technology half a dozen times on this conversation so far as well, right? It's not just legacy technology, but it's also legacy thinking, right? That's a big challenge for banking. Banks kind of, I like the way Adam put it, right? It's not just a case of creating a digital bank and putting a logo on the front. It's a case of, where are the customers? How do they want to consume the financial services? How do I do that with the lowest cost in terms of both investment, but also in terms of maintenance of serving that customer, all while giving them a great customer experience? And my answer to that question is, you need to do it in the services, the digital services that the consumers, both as individuals but also as businesses, are using. So the big challenge that banks are facing right now is, how do they get the financial services into the digital software products that people are using in their day-to-day lives? How do they do it safely? How do they do it in a way that's protected both from a data point of view, because regulation is tightening. The way in which banks look after people's information is getting more and more scrutinized, and so it should. And also then you have the rising specter of consumer duty. How do you make sure that the products that you're providing are actually appropriate? And a lot of those answers are making sure you have the right data on the people. And this again goes back to contextually, what data can you get from the applications that they're using in a way that they are prepared to give it to you in order for you to be able to give them good services. So, the fundamental challenge that digital banking is facing is the consumers are not where they were previously. They are now expected to be served inside of the digital solutions that they're using in their day-to-day lives.
Yeah, that's a really interesting point. I really love that. But Jonah, do you have anything to add there from your perspective?
And yes, I think I like to weave the 2 points that Adam and Daniel raised. I mean, when you look at digital banking and you look at it in the last 5-10 years, it's been driven by a lot of innovation. Okay. Now, what you then find is that innovation largely has been driven on the backs of new entrants coming into the market, the fintechs, and even some of the big banks making these investments. Now, as this competitive tension between the fintechs and the and the traditional banks continue to exist. I hope that doesn't take away the funding and the necessary investment required to continue to drive new innovation. Okay, I'm hoping that as things evolve, the financing, the innovation required to simplify, to improve speed, improve convenience, to continue to make digital banking the beautiful thing that we have today remains. So for me, we're having enough competitive tension not to take away the funding that drives innovation.
Yeah, for sure. Really interesting. I love that. I want to touch really briefly on COVID and the impact of the pandemic. And I know we're all sick of talking about it, so I do apologize for bringing it up again. But I think I'd love to know what your thoughts are specifically on how much of an impact the pandemic and the lockdowns and COVID in general had on the kind of booming digital banking landscape that we see now. So I mean, Jonah, what do you think on this one?
Okay, so for me, I think there are three big things. Again, a big thanks to, when you look at one of the positive sides of COVID is the fact that for moving business, for moving digital banking online, COVID basically made that a no-brainer. Okay, so adoption grew by almost triple digits. Digitization of services grew by almost triple digits. The number of services we have today by that, and then it also made the conversation with the regulator a lot more easier. Before now, what you then find was a lot of regulation, a lot of things you wanted to get through the regulator was very difficult. Compliance was at the highest level. But what COVID then did was to look, as adoption by consumers and businesses grew rapidly, regulation had to be dragged along with that. So for me, the triple blessing for an impact of COVID on digital banking was adoption, full digitization of services, and the fact that regulation was able to now freely and easily support the kind of growth that we saw in the last 5 years.
Yeah, fantastic. And Daniel, what do you think?
I think I've already made the largest point I want to make, so maybe I'll just kind of repeat it and give a different context. Customer expectations went through the roof because everyone was continuously under the same roof, right? We didn't go anywhere. So in the same way as people were staring at walls and going, oh, wow, my house needs a lick of paint, or I'm going to extend it, or I'm going to redo the garden or whatever. People were saying, this service that I've been putting up with being really poor for ages, I'm not going to put up with it anymore, right? And they had time on their hands to look around and see, were there better digital services elsewhere? So you had a whole raft of businesses that came up, a whole raft, fintechs, neobanks that we've already been talking about, so that they came on board, and people went, wow, I can get this same service that I've been getting, lending, investment advice, whatever it is. I can get it so much better with someone else that, because I can't go to the branch, which I, to change my address. So I'm going to open a new account that allows me to open it without having to go there. And, it's just this same point over and over again. People's expectations, which were already high, continue to go higher and then spread out into every other line of thinking, because maybe they'd been okay with the fact that their pension had to be a fully analog purpose. Well, now they're not, right? Maybe they're okay with their insurance being a kind of analog, or print off your documents and sign it and send it in. So, or the expectations were raised because people were focusing almost exclusively on digital experiences. So it became, if you don't have a great digital experience, you don't have a customer.
Yeah, absolutely. I love that. And Adam, what do you think on this one?
Yeah, just following on from that, really, it's obviously it was horrendous going through COVID, but a lot of good things have come of it. And I think a lot of the banks, they were thinking about doing these things, but then they were probably empowered to just make it happen and get it done quickly. So it forced their hands essentially, because otherwise they've got no customers, they've got no business, and they'd be in big trouble. So I think, but what it also forced them to do is focus on the customer experience. Like in Jonah's case out in Africa, it's the having low bandwidth and not the latest smartphones is a huge problem over there. So it's actually designing technology that can work for everybody, anywhere, anytime. and you know, we work very hard to make sure the technology works, whether you've got a high bandwidth connection or a low bandwidth connection, and you should be able to create those journeys that work for everybody. And the same with you know, bias as well. They built products and journeys that worked for them in a certain country, but then different races, nationalities, ethnicities can have a huge impact they're going through. So they would have a completely different experience, same journey, but completely different experience just because of the way they look. And that's something as well, you have to work really harder, and it's accelerated all of that for consumers. So, but it was forced by COVID. Otherwise, we could be another 5 years off being where we are today without COVID.
Maybe if I could just come back in, because this is reminded me, something Adam said has reminded me of a funny story from the COVID times. A bank who will remain nameless was very much dragged into the 21st century when they realized that all of their on-premise computer systems that they had, people weren't able to go in and solve the problems on premise because they weren't allowed to go there, and they didn't have the ability to access them remotely. So the bank suddenly had a huge problem of how do we ship secure devices out to our emergency engineers, so that actually we can keep the lights on, and how, you know, so it accelerated this change. And I think, you know, I called it legacy thinking earlier. I think it created a kind of right turn moment almost, when people thought, wow, the way that we've been doing this simply isn't going to work for the next 15, 20, 25 years.
Yeah, fantastic. I love that. It was definitely a period of change for sure. But I guess, you know, we've talked about the past, we've talked about the present. Let's talk about the future and where digital banking is going to go. Like we've mentioned and touched on briefly before, there's a lot of exciting things happening at the moment, I guess, with like AI, cybersecurity, other things like that. So it'd be great to know what you all think the future of digital banking is going to be. Adam, I'm going to ask you that one first.
I mean, it's a hugely exciting opportunity and look into the future, because the three things that have changed the most is the internet. That's changed digital banking because it's taken it online. Mobile phones have absolutely changed the game. And the next thing is going to be sort of artificial intelligence and how you can utilize that to automate things, streamline things, use data better, and make decisions that are personalized decisions for the consumer. So don't treat every single banking customer as exactly the same, but offer personalized experiences. And there's so much data there, and you've got the tools and the systems now to look at that data intelligently. I could ask ChatGPT to write something for me now. I'm pretty sure the banks can utilize that AI and create those personalized experiences. And whether that's you want a new product and you're delivering that at the right time, or the channel that they choose to go through the onboarding process, or when they're trying to make a transaction, to Daniel's points, at the point of time that they need it, it's available there and for them, and it's a great customer experience. And not just the positive experience when I'm trying to do something, but when stuff goes wrong as well. How do you deal with that as a bank can be the difference of whether you keep that customer or you lose that customer. And that word of mouth is invaluable. So focusing on the things and the processes when things go wrong, I think it's a huge opportunity for digital banking over the coming years. And yeah, the sector I'm in identity, we're extremely excited. We think the face is going to have a monumental impact on those changes. And it's thanks to the internet and these devices that are really going to make the difference in terms of brands being able to utilize that and use the AI. But on the flip side, it's great using AI and machine learning and things like that for a positive journey. The fraudsters also have access to these tools, and they're probably ahead of the game in terms of R&D on these AI tools that are available and out there for them. So my saying that I always say is you've got to fight AI with AI. So if the fraudsters are using it to attack you and use that data to how are you vulnerable and how they can break you, then you've got to use tools like ours where we're heavily AI led to stop those fraudsters getting through the front door or triggering when you suspect something's wrong, and then using your face to prove that it really is the individual that you're dealing with and it's not a robot. But the robots are coming. But it's was it Minority Report, isn't it? It's amazing how the films are so accurate to where we're heading now.
Yeah, absolutely. Daniel, what does the future look like for you?
What does the future look like for digital banking? It's going to come as a surprise to no one. That I'm going to say it's going to be all about contextual financial services, embedded financial services. It's going to be all about whatever software you're using, getting the financial service inside of that. And actually, it's not just about that being a better experience for the customer. It's also about that's a safer way to deliver the financial service for the banking institution. If you're going to make a loan to someone, why not do it through their payroll service, right? So that you actually can see how much money they're getting on a regular basis. If you're going to lend money to a business, why not do it inside of their APAR system, right? The more information you have on an organization, the better decision you're going to be able to make. The more AI you're going to be able to leverage, to Adam's point, and I completely agree with that. You're going to be able to personalize the services and the tools that individuals and companies need by having more data and giving it in a more controlled fashion. If you give someone a loan that can only be used inside of an application to hire to buy a car, right? That's much better risk than it is if you give them the money full stop and they can do it on anything. So, the embedded finance isn't just a nice fun phrase. The whole point is it's a more accurate, it's a more efficient, it's a lower risk and a higher profitability distribution channel for financial services. So we're going to see more and more financial services embedded inside of digital solutions. The key will be, can it be done safely? Can it be done meeting regulation? Can it be done with the understanding that you have to protect the end user at the same time? And that's going to be again, that's going to be the challenge. But companies like Weaver, we're here really to solve that problem for organizations like banks that have the legacy technology that hasn't been touched in 30, 40, 50 years, that they don't want to fall over, but they still have to meet this expectation from the customer that the financial service comes inside of the digital solution they're using.
Yeah, absolutely. Thank you, Daniel. And then Jonah, what do you think? Where is the future going for you?
Well, I agree with Adam and Daniel. What's been very fascinating for me is the fact that digital banking has almost been globalized now. So what you find is a lot of services that we consume in different parts of the world are delivered from different parts of different parts of the world. So what you then find is people now need to make payments from either their local bank accounts or from international bank accounts. So what you're seeing is there's somebody in Nigeria who has a bank account with JP Morgan, or has something with HSBC in Asia or RBC in Canada, and you're doing transactions because you want to pay for services that are local. You want to pay for trade, you want to pay for consumer services and all the and pay school fees and the rest of it. So for me, that nexus between digital banking platforms being available and the ability for consumers to access them and conduct and consume services in and around the world is a very interesting perspective, and I'm looking forward to what it will look like in the next 10, 20 years.
Amazing stuff. Fantastic. Well, unfortunately, that does bring us to the end of our webinar today. I'm sure we could keep on talking about this for hours and hours, but firstly, obviously, thank you to our online audience for watching. If you want to hear more about the Power 50, then if you just head on over to www.thepower50.com. And also, thank you so much to my panelists, Adam, Daniel, Jonah. You have all been absolutely fantastic. It's been so interesting to hear your thoughts on this topic and to see where this industry is going to go. So I guess we'll all just be watching with our popcorn as the future takes place, as you guys have said it. So maybe we'll check back in a few years' time and see if your predictions were correct or not. But thank you so much for joining me. It's been a pleasure to have you sharing your insights with me today. So thanks so much, and hopefully see you soon.
Thanks, Polly.
Thanks, Polly. Thanks, Adam.
Thanks, Polly. My pleasure.